Good morning and welcome to Trading with Larry. I got the three-headed monster up for the last day. Clint is joining us. Eric is here. I'm here. Guess what, guys? There is no inflation anywhere. Trump erased one of the numbers, took a number out, and somehow the year-over-year CPI is at 2.7. Um, pretty unbelievable, right?
Oil's been down.
I guess I don't I think there are like 8,000 components here. I actually don't know how many, but it's unbelievable the amount of components that are made up on this report. But here we sit. Everything is good. Uh, and we'll see if the market can hold the gains. And we've got back three quarters of yesterday almost. I don't know what yesterday was. Not a lot of news out there. We had the Oracle news, and you know, basically that took the market down. And here we sit. We'll see how the day pans out.
I think that Oracle news yesterday really set the stage early in the morning. I saw that come across the wire, and I was like, "That's not good." When an investor pulls out of a project, and data centers are skittish right now, investor sentiment regarding data centers is skittish. And then that news comes out. People are looking at credit default swaps. CoreWeave is, I mean, that their CDS is trading like they're going bankrupt. So
Yeah, that's what Larry and we pulled that chart up yesterday. Oracle's CDS swaps. As of yesterday, before that news hit, it was the highest since 2022, and I think post move yesterday is now the highest since the financial crisis for at least just for Oracle. But those stocks sold off as the day went on. But I thought the craziest move yesterday was in Bitcoin. I mean, it went from being up a couple percent to down a couple percent in like the span of an hour.
Yeah, it was a big move. Markets are moving on air. I think a little of what we've seen this week was, you know, um, the lightening up of positions. And that's really what I think a lot of this is. Um, Moving forward. So we'll see today. Markets are up a lot. I mean, the Nasdaq futures is ridiculous. I mean, yesterday down 400, today up 300, swinging around on a dime with no liquidity. And it's funny. I'm looking at stocks here, and they're up, but they're not up near what they were down. Like Oracle was down 11 yesterday; it's up 2. Um, you know, Nvidia was down; it's up a little. These stocks are not up. I mean, the market is somehow up a lot, but these stocks are not up a lot. I don't.
Micron's up 13% on earnings.
Yeah, I don't. I don't really. You know, I don't know. I don't know. Micron seems like it's really outside the box relative to what's going on. Um,
You know what's up a lot, interestingly, with Trump's speech yesterday? When was the last time anybody talked about DJT? His stock.
Never, like never. I mean,
Well, that stock is up 25% pre-market.
well, you know why, right?
Do tell.
Oh, they merged with a fusion company. Okay. Privately held fusion company. So now Trump is going to put fusion into the government contracts, and who knows what else this guy's going to do. But that's why it's up. Just so FYI, it's up because of that. And listen, I'm like staring at the number on my screen, and it's actually I'm being honest. It's actually a joke. It's actually insulting uh, to look at a number like that as potentially real. And come on, you think in this quarter or even year over year that inflation is down? I'm just asking what you guys think. Okay, you're my two go-to guys, and I want to understand why, how that could even be possible. When
I'll,
last night the guy is calling a press conference prime time to convince people that it wasn't his fault that everyone's going dead broke because of prices.
I'll
So
tell you. I'll tell you exactly how that number is possible, and I don't think a lot of people realize this. And this could definitely be a bigger number given the government shutdown and availability of data. But what a lot of people don't realize is that the BLS, when they calculate CPI, there are some components that they are making estimates for. So usually, I think that number is around 10%. So 10% of the values they estimate when data is unavailable. That number in August, this is the latest data I have, that latest number in August was 36%. So they're estimating 36% of the CPI basket and where it's at right now. That number could be higher since then, especially given the government shutdown.
I agree. I mean, I'm just surprised. I listen. I'm gonna have to say you had to know it was going to be better. There's no way the guy was going to come out telling you prices are going lower if they're actually not. So, but this number being off this much just seems, I don't know, a time really where we paid this much attention to CPI or PPI and have it be off by 5 and 6 tenths. Okay. Especially on a year over year number. So something is weird, you know.
You think this report affects outlook of interest rates for next year?
I don't. And listen, you're very focused, and I appreciate it on interest rates. I'm not as focused as you. I mean, you're deeply focused on whether the Fed is going to cut another one time, two times, three times. All you got to know is this was the weakest quarter basically of the year, other than, when we had the tariff tantrum and they cut rates basically two times in this quarter and one time right before the quarter. I don't think cutting interest rates is really meaningful, which leads me to my next thing. Waller, we talked a little about this yesterday. Waller was out yesterday on the tape saying, Fed independence, you know.
He made some comment about not feeling like they need to cut rates much further. Which, when he said that, I felt like he immediately removed himself from from candidacy for Fed chair.
Yeah, I agree. I agree.
Hmm.
You know. So we'll markets are ripping. You know.
I think one thing that's been interesting with this whole recent market action, and this has been going on since around Thanksgiving, is that you've had a lot of these we talked the other day about all these Mag 7 stocks selling off. I mean, Nvidia's near 3-month lows. You have what happened with Oracle, Microsoft's pulling back, but the action in the average stocks actually been holding up decently. So even though you had the S&P down, whatever 1.16%, something like that yesterday, there were actually more stocks in the S&P 500 that went up yesterday than went down. I thought that
Really?
was pretty incredible. Same thing on the NYSE. The NYSE yesterday, it wasn't by much, but there were actually more stocks going higher than lower yesterday on the NYSE. And you've kind of seen that. I mean, if you pull up, I don't know if I can pull up a chart of the equal weight S&P. So if you look at the equal weight S&P 500, there's an ETF that tracks it. It says RSP. This black line on here, this is the 50-day moving average. RSP, I mean, it broke out to new highs earlier this month and is making a smaller pullback. But I mean, this is holding up way better than what you're seeing with the S&P. I mean, the S&P is below its 50-day moving average now once again. So are the Qs, and that just shows they're being drugged lower by again by these Mag 7 names, which isn't surprising when they're weak. I mean, the top 10 names in the S&P are over 40% of the index, and so it's just, if you're an index investor, you're living and dying by what those names are doing right now.
Yeah.
Yeah, I would say this was kind of a bullish rotation, but bearish for the index because they're pulling out of tech, which is dominating the weighting. I think that's pulling it down. But like you're saying, it's bullish in my view because the market is less myopic and they're finding opportunities elsewhere, and that's not a bad thing.
Yeah, and that's I agree. I mean, I think that rotation is bullish so long as you don't start to see, you don't start to see the average stock catch down. Now, I wonder too how much of this is just year end flows. I mean, how much of this is year end rebalancing? I mean, the Mag 7 through the end of November, I think, accounted for like 45% of the gains in the S&P 500, which they were a slightly larger share than that last year. I mean, they've continued to dominate the action, and do you just see, funds rebalancing away from those at the end of the year, and is that a source of some of the weakness that we're seeing in those names right now?
Yeah, rates finally coming down a little bit. It's been weird seeing rates up like this since Thanksgiving, and the market was kind of holding steady and finally gave way. Here you have today rates dropping. I think if rates continue to drop, the market is going to look at that like a positive. We had a really weak job. I mean, I don't know if you guys think the jobs report was weak, the one that we had recently, but I thought it was incredibly weak. And I think an unemployment rate of 4.6 has a lot of room to the upside next year because if data center growth starts to come off, well, that's been holding up GDP this year. If that starts to come off, that could be, we could start to see that unemployment rate come up, and you could start to see conversations about more rate cuts and more than people think next year. I'm actually bracing for that.
Yeah. I mean, we'll have to see how all of that plays out moving forward, but
Like right
you
now,
know.
I'm looking for a relief rally where the shorts get squeezed the hell out of the market. But yeah,
Dude, you
now,
listen, at least one thing stays consistent. Okay. Squeezed
yeah,
out of the market.
squeeze them out, baby.
Okay, whatever you say, son. Whatever you say.
Out. Uh,
They're
yeah,
squeezed out of the market. The
let's squeeze
shorts.
them out.
Where have you been for the last 4 days? Did you know what the imbalance was last night on the close? Do you have any
Well,
idea?
I don't know. It's been fake like every day. I
Okay,
don't even know
well,
why you pay
it's
attention
fake
to it.
until the end. 100% it's fake until the end. But what do you think it was at the end?
I have no idea. I don't follow it.
Okay, 5 billion for sale. So where do you think that the shorts are getting squeezed? That's long selling. There's been long selling for 4 days. Okay, big hedge funds have been long. You know,
I don't know. At the open, it's going to get interesting because usually when you have a short squeeze, the market is already up pre-market, and then at the open, if it gives people a chance to start buying,
well,
and
wait, what's Nasdaq going to be up 2,000 today, like to a record high? I mean, come on, dude. Whatever you say. I mean, all right. What's the squeeze? Hold on. We're already up. Um, you know, you know, we're already up. So the market's up 400 Nasdaq points. You like the market here? You think it's going higher?
it could. You don't see a chance that all of yesterday's retraced. I think
It
there's a
already
shot.
did. It already did. It's already retraced almost all of yesterday.
No
Okay.
way, not all of it.
Almost all of it. Yeah. The S&P was down 70. It's up 55. I don't know. That's pretty close. No,
So Santa coming with the sleigh bells ring a dingling. What's going on?
dude. Only you like Santa coming. Only you like upside, dude. You were green on the podcast for 5 straight days. You're back. You're
Hey,
back. I
hey,
love
you
it.
were
You're back.
yeah, but you're bearish and you were still you were still green on the podcast. So it is what it
No,
is.
I am not. I am not bearish right now into year end at all. I'm nothing into year end. I think.
Ah,
I
okay.
think. Let's tell the people exactly what I'm thinking. Okay, I'm thinking they took prices down over the last 3 or 4 days. Hedge funds. I explained this to you yesterday. Okay, hedge funds needed to liquidate. Okay, the big players aren't liquidating, retail's not liquidating. This was all, hedge funds, etc. Some institutions lightening up. They're giving you an opportunity this morning to lighten up more into the end of the year. People are too long, Eric, coming into the year. What happens on January 1st for every single trader out there and every single investor, they started zero. Okay, they started zero for the new year. Okay. So people don't want to have on massive Nvidia position. Let me ask you this. Does Nvidia look good or bad to you? I'd like to know your opinion at 174. Do you think people, I had a
Uh,
guy, I
my
had a
opinion
guy,
on Nvidia, I told you 2 weeks ago, was a 190, 195 call spread for January
okay, to buy or to sell.
to sell it, sell the call spread.
Okay. I
It
mean,
was
I don't
trading
like
at
that.
50. I know you didn't like it back then, but you know what? That's my opinion. I have, I don't have like I'm not even trading. I don't think it's going anywhere for the next few months. Micron looks more interesting to me for a short because DRAM prices are starting to come down a little bit, and that was really correlated with Micron for the last 3 months. So I know it's up on earnings. Maybe this is a good shot here at the end of the day to put on some call spreads on Micron.
Yeah.
Yeah,
Short call spreads.
yeah, call spreads get a credit.
Okay.
I have to price it in, but that's kind of like where my head is at.
All right. Well, listen, it's pretty amazing that the market was bidless. Okay, let me ask you, what do you think of the close yesterday in the market?
What was that? I didn't hear.
What do you think of the close yesterday in the market? Like the way they whooshed down, no buyer. Okay, and now today they're up massive, and people want to buy. It is right though. People can't buy when the market's going down. They can only buy when the market's going up, right? Isn't that true?
I don't know about you. I was trying to buy,
Okay.
so it was difficult, but it's difficult because things weren't making sense. Like you look at the VIX yesterday, right? And like if there's a virus in the market, a true economic virus where, there's something going on, you're looking for, a correction kind of move, the VIX has got to be moving. The VIX hasn't moved in like a week. It's been in a range, and you're seeing the Nasdaq drop almost 2 standard deviation yesterday. So a lot of stuff like that just didn't make a lot of sense. And like Clint was saying, market breadth was actually strong, not weak.
I You know what? I don't know. The year, I would say the year is pretty in. They're gonna, like I said, they have like 6, 7 trading days to go left in the year. I would say that if we close here at the end of the year, which I'm not so confident we're not going to see more selling because I still believe, I know you're in your youth. You're like the guy that goes to the dentist and gets that laughing gas. You're like in that euphoric stage because the market's up. You think it's going to go up infinity.
All right.
But
I hope the year is not in because I got to make some money back from the last couple of weeks, man. You know what I'm talking
no, I think, but you can. You just have to use options correctly. But I'm not. Listen. I think that there's
about. I
still
have that
light.
conversation again about options versus futures. I don't think it matters. I think, again,
Okay. Okay.
You could get your head blown off with options, correct?
Okay. Well, let me just say this. Okay. And Clint, I apologize because you're sitting there all calm. I
Oh, good.
I don't know what you're talking about. Okay. I spoke
I'm
to
just going to duck out of the way here.
I spoke to the
Clint, we need
CBOE
the peace.
yesterday.
We need the
Okay.
peace.
Time out. Time out. Okay. Time out. Just time out. CBOE volumes are at a record high. They're 10x what they were 5 years ago. 10x, maybe more. Futures volumes are lower. What is that telling you? They're lower than they were 5 years ago. What is that telling you? It's
It's
telling
telling
you
you
no
there's
one's trading
a preference for
futures.
options, and retail loves options. They don't like futures as much. But it doesn't mean you can't get your head blown off trading options.
You can 100% get your head blown off. I'm not talking about my head getting blown off. Listen, I had a conversation with a guy who is definitely, hopefully, on this podcast who traded with me 30 years ago. Okay. He was a 20 something year old kid. He was in my office in 1999 during the internet bubble. Thanksgiving Friday, we saw stuff that we've never seen to this point. But what I'm telling you is I said to the guy, pull up NASDAQ futures. Check this out. They're untradeable, dude. They're not even tradable. You can't trade them. Okay. This is one of the biggest futures in the world. You can't trade them. It goes like this on your screen, up and down and up and down. You can't even find them. That's what you want to trade? You can't even find them. If
Okay.
you put an order to buy and put a stop out 25 NASDAQ points lower, you'll be stopped out before you put that order in. I'm just telling you. So I don't like that. I'm just saying. And, market is up a lot today. I would tell you that I am not saying the market's going down on the day or anything like that, but I would be a little bit leery here. Okay. Because I do think we're in a phase where institutions are lightening positions and hedge funds are lightening positions. I don't see anyone wanting to aggressively buy. Listen, a stock that I like that, somehow got really bad perceived news yesterday, Oracle, okay? The stock's 180. I mean, that's got to be really really low if what we're seeing in AI is intact, don't you think? I mean, isn't that the poster child for AI? I mean, they're building data centers, they're involved with every one of these scrub companies that have promised $10 billion to them. Isn't that the poster child for what's going on here? And literally I just don't know what you're seeing that
AI could still be successful, and people may shy away from Oracle because of the debt burden. I mean, this is why CDS is going up. These companies are taking on debt, and even within tech, you see a rotation into companies that have better cash flow than the other ones.
yeah, but listen, CDS, okay, is the prime example why there is a huge problem here. Let me ask you a question. Do you think that Oracle is going to default on their debt? I mean, if you think that this market's going so much lower that it's gonna be a bear market blow up. Okay,
No, I don't think so, but I think
the market does.
CoreWeave is
The market
trading like
does.
it might. Yeah, I mean CDS and CoreWeave is much much higher than CDS and Oracle, much higher. I mean the
Okay.
CDS and CoreWeave is like, whoa, is this like Bear Stearns or something? You know, I'm actually trying to like dig in and be like, what is the possibility of a black swan from CoreWeave? Like, how big of a domino is this potentially?
I'm assuming, I mean, CoreWeave has negative earnings, and I assume they have negative free cash flow. I mean, that's a good reason why, if they're taking on debt as well, why they would be perceived even more risky than anything around Oracle right now.
Oh, you're comparing. I don't even know why we're talking about CoreWeave on this podcast. I don't even think it's real. Okay, I don't even think they're. What is it? A $2 billion company that you're bringing up against Oracle, which is the top 10 company in the world. You're looking at CDS on CoreWeave. I mean,
CoreWeave's a $32 billion market cap. Still,
okay, wait, 30,
still nothing compared to
32
Oracle.
billion.
Still nothing compared to Oracle, but
dude.
not 2 billion. Here's
No,
what
I'm
I
saying
would
32 billion is the old 2 billion. Okay. I mean, every company, is billions. So, you
here's
know,
what here's what I would watch today with all these names. And I just been scanning some of these pre-market. Is that the stocks that got hit the hardest yesterday should be the ones most sensitive to valuations and the rate outlook. And like these should be the ones that get the biggest benefit today from the CPI number. These should be the ones that get the biggest benefit from if there's any adjustments to the rate outlook at all, which I saw, pricing for rate cuts went up a little bit for next year, went to, like 62 basis points totals being priced in. But these stocks right now, pre-market, they're all retracing less than half of yesterday's losses. Like Oracle pre-market's up less than 2%. It lost over 5% yesterday. Nvidia, same thing. Tesla, same thing. Like all these things are retracing less or up less than half of what they lost yesterday. I mean, that to me, is a sign of weakness because these are the ones that should be responding the best based on that inflation number today. In theory, and that's why these things could continue to weigh. Santa Claus maybe doesn't show up. I don't know.
no, what you're seeing actually is really, you know, really interesting. And it's really the underlying problem. And the problem is, you ready? Most overowned stock by retail, Nvidia. Okay. Probably top five, Oracle. Okay. Obviously, Apple's own, Microsoft destroyed. These stocks are destroyed. Okay. They're barely up on the year. That's what's so amazing. Like, if you look, at the net change in Nvidia on the year, coming into yesterday, maybe it's 20%, which, listen, is a great year, but that's not a great year for the retail public. They want 100% in an hour. Okay. These stocks are overowned. Listen, what you're pointing out here is really important. They're being liquidated. I'm long Oracle. Okay. I'm not long it for the next week or even the next 3 weeks. I'm long Oracle in my PA. Okay. I rarely do that. Okay. And the reason why is because even if things go really south and the stock goes down a little, the market's going to get slammed. But what you're picking up, your perception is fully correct. Any other time this year, if the NASDAQ was up 300, Nvidia would be up 10, not 2, right? Am I wrong? What am I missing? So that what they've done to get us up this much is they have, Nvidia up 3, Oracle up 2, 3. They have this one up $1, this one up 3, and then it all equates to get us up like 300 points. But under the hood, these stocks are no good. And listen, if they come to sell next week in Nvidia, it's going to go below 170. And I think the right price for Nvidia, everyone will probably kill me, is from before where it was when it went up from 140 to 160 off of the China, buying H20 chips. Now, what are they buying? H200s? But they're not buying. You think they're buying? Do you guys actually think that China's buying our chips?
Not the H200. I don't think they want those. I think they want the H20s.
Okay, but they offered them the H20s. So I
No,
don't think.
the H200s.
No, I thought they reversed that and they were giving them the better chip. Not the Blackwell chip, but the higher quality chip. But
Yeah, they don't want that one.
but wait. The United States government is taxing 25% of every sale. Okay. I mean, come on. And China's going to go for that? Think about all the stuff since it's the last day that we're going to be on live. Think about all the stuff that we talked about during the year, about, is there a China deal, that deal? What happened to all the trade deals? Where are they? Like, I thought, China was a second away from doing one of the greatest deals of all time, and then they get the trade representative on, and he basically says that China's not even buying soybeans right now. So I think there's a lot of underlying, current here. Listen, it's close to year end. There's a couple of trading days left. We're going to prep for next year. I do think what Clint was seeing is very prevalent in the market. How after Oracle on phony news yesterday, phony news, like news that should not move a stock, you know, basically fivefold what the deal is even worth, okay, only bounced $2. Why is Nvidia looking like it's going below 170? Um, it's up a cup. What's Nvidia up? Three? I'm not looking at it right now. I don't know where it is, but
Yeah,
maybe
up three.
right. It's up three. It was down more than that yesterday, and it just doesn't feel good. It doesn't feel good. And you know what? The low on this move is like at the 168 level. I mean, I think you're going to see that minimally the first week of the year. And I think from what's going on, the AI trade seems busted to the retail. Listen, I don't think retail is celebrating here this year. I honestly, maybe I'm wrong, but
No, they've been they've been they've been hammered. They've been hammered.
right. So that, but how? The market's up, everything's up.
Yeah, because they keep buying the highs pretty much, and I think into October they remained long, and then things started to get weird, and I don't think any of them got out.
You know what? I'm not 100% sure what went on here. It's,
Yeah, it felt for a while there. It felt like 2021 again into like October. Like you had the space theme was ripping. You had SPACs being announced, new deals. You had quantum computing ripping. Like all these speculative groups, crypto miners, and then since October, I mean these things have just absolutely crashed. I mean I think that's where if you kind of track where retail sentiment is at, it's less reflective of what the S&P 500 is doing and more reflective of what some of these speculative, growth sectors are doing. And those things have just gotten they've given everything back and then some. I mean, they've gotten absolutely obliterated since, the run that they made from kind of going into summer into September, October for the most part.
yeah.
The space trade is interesting for next year. SpaceX coming out with an IPO. I think that's going to be an event, and I like space. Space is I think that's the next big trade.
Oh, yeah. Dude, you are like flies to the moon, baby. It's gonna
I
bring in
mean,
a lot of revenue going to Mars 1 year,
it's
500 years
fascinating.
from today.
Stuff that you're talking about, I think, is absolutely fascinating, and I hope they get it done. I mean, putting data centers up in space, using solar energy with satellites. I think it's pretty interesting, and I think some of it is actually feasible.
For money? For what kind of money? What money is it bringing? Like, how is that helping whatever company with earnings or whatever? You just like it. It's like a fantasy. You read about it in like a comic book or a
Well, yeah,
magazine.
it starts off as a narrative, but in the case of like an AST Space Mobile, and that starts to translate into real revenue.
You know what's funny? You talk about the same stocks like CoreWeave, AST Mobile. Like, I don't know. There's got to be other stocks out there. I mean, I'm lost at what you're saying. It's like it's all that's wrong with AI as well. Like the reason why people are now, let me ask you this: why all of a sudden in 2 months are they cautious on AI? Why is everyone cautious on AI? Not only are they cautious, they're actually negative on AI. They're freaking out, right? I mean, for people to sit there and price CDS in Oracle at the levels they are, to me, is an underlying disaster brewing because Oracle, which shouldn't be borrowing the money they're borrowing, is borrowing so much money to enter this space with data centers. Like I don't understand how are they going to make trillions or hundreds of billions of dollars in having 5 data centers, 10. Like, I'm just not, Clint. I mean, maybe you could tell me, like, I'm not understanding it. Like, my roommate from college was the first person in cloud storage. He had a company called XN that he sold to private equity many years ago. He probably should have held it. He'd be a billionaire right now, a literal billionaire. Okay. He was the first one in the space. Okay. To me, I went to his office where he had like 200,000 square feet. It was the most amazing. You could have licked the floor. That's how clean it was. It was just cages of servers. But I'm not understanding why that costs so much money to build. It's an empty warehouse. I mean, maybe putting in the product in there is different, but it's an empty warehouse.
Yeah, I mean, one, I so you can look at. I saw something interesting from Bloomberg. I mean, it's a composite valuation indicator. It took into account like price to sales, price to book, the PE ratio, the market cap to GDP. That's kind of the Buffett ratio. And valuations right now are higher. If you percentile rank that, valuations right now are higher than they have been at any point in history. And they took this thing back to like 1900. Like we're even more expensive than where it was in 1929. Higher than the internet bubble, obviously. So, one reason why these stocks have been so sensitive to any given headline right now is because they're priced for perfection. Like any little wobble in the outlook at all, just derails the expectations for what these things could deliver, and that's I think that's one reason why you're seeing the pullback right here. But I think you can still find some opportunities around the AI trade. You just have to look at sort of the pick and shovel type plays. Like for instance, I think like 40% or something like that of the energy usage from a data center is from cooling. So like these HVAC systems that data centers need for their cooling needs. There's companies you can look at there like Train, Comfort Systems, or Carrier. Things like that. And then there's obviously, we've talked a lot about the energy trade around this, in particular natural gas, where we put on a position here recently. So I think, the sums are massive. The companies that grab the most headlines around this are priced for perfection, but you can still find good, call it pick and shovel plays around this.
Yeah.
It's quad witching. How'd you guys do on your famous trade?
Not well. It's not over, but it's over. Not over, but it's over. We did not make money for our investors. I apologize. On to the next. But, the beauty with options is we only lost what we risked. And here we sit.
Straddle is interesting here. Still trading pretty high, 35. What do you think of that?
I don't think anything. I think the market has zero liquidity in it, and the market is up 50 handles, and it could go down on the day or it could go up more. I honestly don't know. I do think the market is seeing selling that is actually, to be completely honest with you, the selling is real. This is real selling. It's not fake. There's been significant selling across the board, and I think listen, we can get away with it today, and the market could go up even more. Who knows? But it's I think
Yeah, the volumes on the sell off have been above average, above like a trailing average. So yeah, there's been some volume with the last 4 days of selling.
well, it's liquidation. I just think it's what I said. People are massively long Oracle, etc. You know, so we'll see. But I want to wrap early because I'm a little busy in the market, and I want to thank you guys, especially for helping out the opportunistic trader and making it what it is. I want to thank my subscribers for subscribing and trusting in us. I know we've been not giving as many trades over the last 6 months as you've seen over the last 7 years, but we're expecting big things for next year. And I'm excited to start the year. So I wish everybody great holiday and a happy new year, and we'll be back next year. Peace.